So what do you do if you own a vehicle that you can no longer afford the payments on? If you purchase a new or used vehicle, even in the last few years, and because of the interest rate, because of the price of the vehicle, maybe you bought at the height of the peak of the market, and your payments are too high. And maybe other expenses in your life have popped up that you can't afford everything, and your extra vehicle is one that you can't afford anymore. How do you get out from under that debt, from that negative equity? And that's the problem. If you have a vehicle that you owe money on, it's more than likely that the amount you owe is higher than the amount you could sell the vehicle for. Let's say, for example, you owe $18,000 on your vehicle. It might only be worth $15,000 or $14,000. Sure, one way to get out of it is to just pay the difference, right? Sell it for $14,000. Put $4,000 of your own cash into the deal to cover the $18,000, and then walk away. That's normally not practical or even desirable. So are there other methods you could use to get out from under the vehicle? There is, and it's called a short sale. And you can get more information on our website, carshortsale.com. It's the same strategy, the same method that was used back in the housing crisis of 2008, where people would get out from under their mortgages, do a short sale on their house. Vehicles very much the same. There are a few differences. Many banks actually have a vehicle short sale official program. They don't advertise it. They don't make it very visible because they really don't want people to do it because they lose money. If you do a short sale, on that $18,000 car and only pay $14,000, they lose $4,000 cash, so they don't want to do it. However, they'd rather do that than do a repossession. That's the one thing to keep in mind. Banks don't want to do repossessions. They don't want to do charge-offs. They don't want to do write-offs. They would rather do a short sale, and because it saves them money. If they take that car that is a repossession and that's worth $14,000, by the time they repossess it, that's going to cost them $700 to $800. They're going to have to transport it to an auction. That's going to cost another $700 or $800. They're going to have to pay the auction fees and the carrying costs in the meantime. That's another $700 or $800. It can cost $2,000 or $3,000 per vehicle to process a repossession, even a voluntary repossession. So they don't want to go through that route. A short sale might be better. If you can arrange a sale of the vehicle for market value, they might eat the difference. And the way you maximize your probability is you go through a series of steps. And you can see on the screen here, there's a list of 10 steps, 10 documents you want to put together. And you can get this on our website. You don't have to memorize it or write it down. It's on carshortsale.com. First is get a vehicle condition form. You want to document what condition the vehicle's in. Don't make it any better or worse than what it is. If you try to make it like it sounds worse than it really is, that's going to backfire. That's going to backfire because at some point the lender may do their own inspection or send out an appraiser, and if they find that you improperly fudge the numbers to make the vehicle seem worse than it is, they're going to not accept your short sale. They're going to look at it as fraud. Then you want to do a title history report to show what is the current status of the title. Is it a salvage title? Is it a rebuilt title? What state is it in? So that way they can make sure that they're secured on the title. Then you're going to do a valuation report. What is the current market value based on that condition and that title history? And that market value report is very important because they're going to use that to determine what their equity position is. If the vehicle is owed $8,000 and the market value is $14,000, now they know what their equity position is. Then what you're going to do is you're going to contact that lien holder and request a short sale. Now, the way that that's done is it varies from lender to lender. There's some forms that lenders have. Sometimes the lenders don't have any forms or don't have any official procedure. In that case, you want to create an official request for what's called an estoppel letter. An estoppel letter is an agreement from the lender to accept a lower amount. Now, you don't have to pay that amount when you get the estoppel letter because you're not going to know if you're going to sell the car. So if let's say the market value is $14,000, you get them to agree to accept $14,000, and in exchange for that, will cancel the rest of the loan. Okay, you don't want to pay it because what if you don't sell it for $14,000? But you want to get the agreement in advance. You want it in writing because if you don't get it in writing, now if you try to sell it and you do sell it for 14, they might say, no, we want 18, and you owe the difference. So you want to get that estoppel letter in writing. Then you find a buyer. It could be an institutional buyer like CarMax or Zoom or Vroom or one of the other vehicle purchasing companies, or it could be a retail buyer. You can get more money from a retail buyer. It's a little more trouble to sell it on, Craigslist or Facebook Marketplace, because you have to deal with people come and look at your car, and there's a little bit of a risk involved, so be aware of that. But once you get the sale done, now you get a bill of sale showing that the purchaser agreed or paid the specific amount for that vehicle. The purchaser paid $14,000. Then you're going to have to put together a couple of affidavits. First of all, an affidavit that the person you sold it to is not a related party. You didn't sell it to your cousin for below market rate just to get rid of your loan, because they're not going to want that. They're going to want to make sure that this is a legitimate deal. You're not trying to get something over on them. So you get that affidavit that's not related. Sometimes they'll want an investigative report from a licensed private investigator, and we have some links for that below too, that no relationship was found between the parties. Then you'll need a financial calculation sheet. They're going to probably want to know about your employment, how much you make, how much you have in the bank, to make sure that it's okay to do this short sale. Because if you have $1 million in the bank, they're probably not going to do a short sale to wipe $4,000 off your debt. And then once you get that done, you'll get a lien release document from the lien holder. It'll clear the lien from that record, and then the new owner can apply for a title, and all those steps are here. It's a little more complicated than that. That was oversimplified. The point of this video is to let you know that requesting a short sale on a vehicle to wipe out your current loan is possible. And even if you have negative equity, banks know that they're already in negative equity. The bank really is the owner of the vehicle. So they're the one with the negative equity, not you. They have the negative equity. Now, you may have a contractual obligation to pay that negative equity, right? But you can also ask them to waive that, because if they know if they repossess it, they're going to have another $3,000 or $4,000 in negative equity that they didn't count on. And now, sure, they can come back after you and try to get it, but they know if you're in this financial trouble on paying the vehicle, it's going to be tough for them to get that money. And to have a clean, more arranged sale, you're kind of doing some of their work for them, right? You're arranging the buyer, you're arranging the transaction. So since you're doing the work for them, you may get some benefit from it. Now remember, we're not attorneys, we're not giving you legal advice. It's up to the lender to decide to do this, but if you put together a very well crafted package of documentation, package of evidence, package of information, many times the lenders will waive that negative equity as long as you're selling it for near the market value of the vehicle and it's a legitimate sale, not just like a wash sale or a straw buyer to try to save you some money on your loan. We also know that it's doable because many lenders have it as an official policy in their internal manuals or even on their website borrower information, right? And some lenders have forms for this. Even if they don't, you still want to go through the process. It doesn't hurt to try, right? In our experience, from what clients have told us, about 70 to 80% of the time it works. And the times we've seen it not work, there was something else about that deal that was an issue. Sometimes the amount that was being asked for the short sale was too low. Instead of asking for the book value of $14,000, the borrower tried to say, I'm going to sell it for $12,000. That's going to get rejected. You have to be near the book value. Sometimes the borrower had high income and money in the bank. They're probably not going to do that. But if you're legitimately in a short sale, distressed, negative equity situation, it's very likely the lender is at least going to work with you. And it doesn't hurt to try to do it. All that can happen is you waste your time in filling out the forms, putting it together, and if you want to spend an hour or two doing paperwork, you can get this done for free. It doesn't cost anything if you do it yourself, and see what the lender is going to offer you. Sometimes they'll even offer you to keep your vehicle and modify your loan. That'll happen too. You don't want to ask for that. You want to ask for a short sale first and let them offer a loan modification. But a vehicle short sale is a very powerful way to take a burden that you have, a negative equity that you have, and get it off your back and get rid of that car payment. You know, you might be spending $500, $600, $700 a month, or even $800 a month for that car. Once you get that short sale done, your negative equity goes away and your payments go away, and all that money goes right back into your budget to pay the rest of your bills and plan for a more secure future.